This Week in Startups is brought to you by Design Crowd. Best custom graphic, logo, and web designs for your business. Get $100 off your design project at designcrowd.com/twist or enter promo code TWIST. And AdRoll, the most widely used retargeting platform in the world with over 25,000 advertisers. Get started with a $100 credit at adroll.com/twist.
Hey everybody, welcome to This Week in Startups. This is the program where we talk about putting a dent in the universe through the vehicle of entrepreneurship, building companies. Now, I've been building companies for over 2 decades, bootstrapping them, having venture capital, having angel investors. I've done it all. I've had modest success as an entrepreneur. I've had extraordinary success as an angel investor. But most of all, I have had a front seat to watching people build companies as a journalist, as a writer, and as a host of this podcast for over 600 episodes. And something changed in the way we built companies in the past decade. And that major change was data-driven product design. Companies started to store large amounts of data because hard drives were essentially free. Storage became free, bandwidth became essentially free, right? They used to charge you, remember? $3 an hour to be on America Online. They used to charge you to upload your videos to the internet. Now all that is free and unlimited. What that did for companies was they could store data. There was no issue. Should we store this data was the big issue back in the day. Is it worth saving this information? If not, delete it. Now you don't actually ask that question anymore. What happened after that was people started to say, well, what do we do with that data since it's sitting there? And big data is the term we use. But big data in itself is kind of this amorphous buzzword. What really matters is how you use that data, how you study that data, what conclusions you come to with that data, and what strategies you then deploy based on that data. It used to be we would start building a product, and it was an artistic endeavor. What did the founder think should exist in the world? They would build it. The world would tell them through reviews, or maybe the usage of the product, if people liked it, the sales. Now we know if people like the product because we're watching their path through the product. So when you use something like Uber or Airbnb, they're watching you, how often you come back, how many seconds you're on a page, what you click on, where your mouse goes. The level of detail is insane. And Tomasz Tunguz is a venture capitalist who previously worked at Google. You were on the AdSense team.
I was.
Where data was the entire mission, wasn't it?
It was everything.
It was everything. And we'll hear about that. And Tomasz is a prolific blogger. You've probably seen him on the social media. And his new book is Winning with Data. Transform your culture, empower your people, and shape the future. Here's a little, for those of you watching, here's the book. Looks very beautiful. You heard my little preamble here, Thomas. Or it's Tomasz,
yes,
so people know.
But Tom is fine.
Tom is fine. But the name is spelled T-O-M-A-S-Z.
Mm-hmm.
And it's kind of like an S-H at the end.
It's
Tomasz.
like an S-H. Yeah, it's Polish.
Tomasz, you say.
Tomasz.
Tomasz.
Yeah, exactly.
And your last name, T-U-N-G-U-Z, is actually Tunguz.
Tunguz, yeah.
Tomasz Tunguz.
Yeah.
I like to pronounce people's names correctly because you know what I find,
What's
Tamush?
that?
Is people, Tom, is people will come to the show.
Yeah.
And they'll type your name into Google.
Yeah.
And then the show comes up because YouTube comes up on the top because Google favors their own products and search results, as you can confirm. I'm joking. Let's not get into any...
confirm or deny.
Cannot confirm or deny. Let's not get into any antitrust issues here. But they want to see how the name is pronounced. So I always try to get it right.
It's great SEO.
It's great SEO. That's true. How to pronounce Tomasz Tunguz. But you wrote the book, and you've been a venture capitalist at Redpoint since 2008. What did you learn at Google, and how long were you at Google running the AdSense team? What did you learn about data when you were there? Because I have a feeling that this book has its origins from your time at the big data company, Google.
Yeah. Yeah, I was there for about 3 years. My GPA was too low, so they wouldn't take me as a PM or an eng. They wouldn't take me as
PM is a product manager.
Or an engineer.
Or an engineer.
Yeah.
So how the hell did you get in there? Were you a sales guy?
I got a job in sales.
You did?
Yeah. So
that's what the stupid people do going into Google. I'm joking, I'm laughing here, but guys like us who are not from Stanford,
Yeah.
Did you go to Stanford?
I went to Dartmouth, but I had a 3.3.
Oh my God, you went to Dartmouth.
I know.
Poor bastard.
Yeah.
So you didn't
but I
go
had a
to-
3.3 and there was a 3.5 threshold. And so they said, well,
How obnoxious is that?
well, it no longer exists. But at
So
the time, it did.
obnoxious. Like only like it's. I mean, you have to admit it's completely obnoxious that you got a 3.3 average, and that means you can't be a product manager at Google because you didn't have 3.5.
Well,
so arbitrary and stupid.
I know. I weaseled my way in. After about a year, I worked in this online sales and operations group. That was Sheryl Sandberg's group. And actually, there's a story in the book
So
where
the stupid people went to work for Sheryl Sandberg. Is basically what you're saying.
No.
People got under 3.5.
It was brilliant. It was all brilliant people.
It was all brilliant.
It was all
people,
brilliant people.
Dartmouth, you can't get into if you're not smart. I'm busting chops. So you went to work for the very famous Sheryl Sandberg, who obviously now is the COO of Facebook.
Yeah.
What was that like?
She was really impressive. I remember.
Why? Why was she impressive?
I remember our first day. She got together all the Nooglers. So Nooglers are new Googlers.
We get it. Yep.
And you wear a beanie with like a little, plastic propeller on the top.
Oh, really? So they haze you a little bit? A little
They haze
hazing,
you.
light hazing.
Light
I like
hazing.
it.
And no paddling, but
No
still a
paddling,
beanie.
just the thing.
And then she sat us all down and she said, this is what I expect of you. This is the way I expect you to speak in front of customers. This is how I expect you to dress. And
Wow.
Yeah.
She taught you how to be an adult.
Yeah. And
Take me through that. What was the, like, how to speak, how to be how to dress?
well, it was like, I don't remember it exactly, but it was really all about respect. It was like, hey, we are the face of Google for the hundreds of thousands of advertisers and the hundreds of thousands of publishers. You are the face of Google. It's a huge responsibility.
Yep.
And we expect you to live up to that responsibility.
Got it.
And so we sat in a circle and I was just stunned at her presence. Like the gravitas she had in the room. And and I went up to her afterwards and I was like, that is the most impressive bit of public speaking I've ever seen. And this was like in a room of like 25 people.
Right.
Yeah. So
She really has that ability to capture people's attention when she speaks.
Yeah. It's sensational.
Yeah.
Yeah.
So you worked for her for a little bit,
Yeah. About a year.
working with clients who were buying ads and publishers who were putting the ads on their site. Is that the idea?
Yeah. Mostly publishers.
Ah,
Yeah.
cool.
And I was given social networks, which were the least attractive clients at the time.
Why were they the least attractive? I'm curious.
Because they had the most page views. So there was a lot of traffic to those websites, but the revenue per page view was really small.
Because people don't click on ads on social networks.
Exactly. It's a totally different dynamic. Or at least they didn't in those days. Facebook obviously has disproven that.
Yeah. How did they? But Facebook still has a very small click-through rate. They just happen to. So the click-through on the ads goes down.
Yes.
The percentage is much lower because when you're doing a search ad,
Yeah.
you explicitly say, I want this.
Yep. That's right.
Tesla Model X lease.
Right.
You know what they want. When you're on Facebook, you don't know what they want. So the percentage of clicks goes down, but you do know psychographic information, right?
Yeah, you've got a lot of information about the user. And so when I became a product manager at Google, one of the things we were building is we were ingesting all this psychographic information, demographic information. We were looking at what people were typing.
Yeah.
And a really interesting thing, so we were, AdSense is this technology where we read what's on a web page.
Yep.
We look at all the ads that we have in inventory and then decide which ads to put on which pages using math.
What's an example of that?
So if you're reading about a mortgage,
Okay.
right, you might be interested in buying a mortgage, and
Sure.
so we're going to show you a bunch of mortgage ads.
Right.
If you're reading about going to Las Vegas, we would show you flight ads, right? So
Got it.
come to Expedia, book flight.
Right. So if I'm reading a story of the top 10 hotels in Las Vegas,
Yep.
it knows hotels, Vegas. It's going to show you Las Vegas hotels.
Exactly.
And that really increased the click-through rate.
That really clicks. And so, but that only works for English when you do it that way, right? So now if you want to translate to a different language, like Chinese, Japanese, Korean, you need to kind of train a new set of math.
Start over.
And it turns out that we had to treat social networks like a foreign language.
Fascinating.
Because the way that people communicate on social networks look like nothing else on the rest of the web.
Interesting. So the way a journalist writes an article,
Yes.
or somebody writes a blog post on the web, people who are the publishers you dealt with, on social networks, people didn't write that way.
They don't write that way.
They were writing, I suspect the issue is you're writing to one person or to your friends versus writing to an audience in a more formal way.
Yeah, that's right. They also did crazy things, like they would put, well, not crazy things, but different things. Like they would intersperse numbers in words. Like if you wanted to have the 8 sound,
Mm-hmm.
you know, like
Hate.
H, and then the number 8.
Yeah.
You don't see that anywhere else on the web, right?
Right.
And so it doesn't match, right?
Got it.
People did this at scale, or like, there's like.
They also don't put titles. I mean, when you
No.
think about publishing and how standards on the web, people don't, or civilians don't know this, but there is a bunch of what they call metadata, right?
Yeah.
Where we say, hey, this is the headline.
Yes.
This is the subheadline. This is the photo. This is a caption on a photo.
Yeah.
You say all that in the markup language, the HTML,
Yes.
which then when Google is looking at the page, they know, hey, the title is this, and there might even be tags. So the author has explicitly said,
This is
hey,
important.
this is
right?
what's important.
Yeah.
Vegas, travel, hotels.
Exactly. Yeah.
They
Yeah.
don't do that on social networks. You're not like, oh, let me
No.
post. I'm going to post about my Vegas trip. Let me put hashtag Vegas. Let me put hashtag, whatever.
Yeah.
You know?
But what I learned there about data was if you had enough data, and you could do some pretty amazing things.
Really?
Yeah.
Explain.
Well, so like, so I'll give you an example in Chinese, right? So in Chinese, a turkey. So Chinese has symbols, right? And complex concepts in Chinese are made of chains of these symbols. And there are also no spaces in the Chinese language. So when a computer reads Chinese, it has to kind of figure out like, okay, so a turkey like you and I eat for Thanksgiving, in Chinese, the English translation is fire chicken. So when a computer is reading fire chicken, it has to determine whether or not, is this article talking about
Cooking chicken?
cooking chicken, or is it talking about a turkey?
Right.
Right?
Two different things.
Two totally different things.
Right.
And so, or like, anyway, they're like a shrimp is like a dragonfish.
Huh.
Right? And there are all these compound words. And so we had to use math in order to figure out what is the greater likelihood. And so, like, and the way that you do that is if you have enough data, then you can train what we use machine learning models in order to be right most of the time.
Okay. When we get back from this very important break, I want to talk about the book and what because you say here, this is how to like basically transform your culture. I'm assuming you mean the culture at a startup company.
Yes.
And empower your people means the people who work at your startup.
Yes.
So I want you to explain exactly what startups, people who are in their first year or two, who only have a small number of people, how they're supposed to execute on data when we get back on This Week in Startups. Hey, everybody, we've got a great new partner on This Week in Startups, and I'm really excited about it because it's a product that we're using here at This Week in Startups and launch, and it's called Design Crowd. You can go ahead and check it out at designcrowd.com and on Twitter at DesignCrowd. What is it? It is the best way to make a logo, a graphics, or web design for your business. It's an online marketplace where you can outsource or crowdsource, as you know, custom designs, and they have over 500,000 designers there around the world. Here's how it works. Very simple. You post a brief. What is a brief? It's basically like your spec. I'm looking for a logo for This Week in Startups. It's a podcast with a bombastic, aggressive, Brooklyn-born bulldog of a host, Jason Calacanis, but it's about technology and finance. And then you get feedback from 50 to 100 designers, sometimes even more. And then you give them feedback. So you look at the 50 or 100 designers' work and you say, you know what? These three speak to me. I like the bulldog logo. We used to have a bulldog logo in This Week in Startups. Yeah, let's play off the bulldog. And then I like this other person who's doing the skyline of New York and the skyline of San Francisco. Oh, that tells the story of Jason going from New York to San Francisco. Great. You give them that feedback. It motivates the designers. They give you more. And then you select the best one and you approve payment to that designer. It's a money-back guarantee. There are designers all over the world who love working on this type of platform, and their clients include the Harvard Business School, Forum for Innovation and Growth, Virgin, HTC, Absolute Vodka, Amnesty International, which was my first job out of school. I worked at Amnesty International as a microcomputer specialist, and 100,000 plus small businesses and entrepreneurs. Visit designcrowd.com/twist, and they will give you up to $100 on your next design project. Go ahead and visit designcrowd.com/twist and save up to $100 on your design project. And for the super fans, special mission, go ahead and thank @DesignCrowd on Twitter and Facebook, and I will like it and retweet it from our different accounts. Great way to engage and reward the partners who make independent media like This Week in Startups possible. Thanks again to our new partner, Design Crowd. Go ahead and try it. It's really good. Okay, let's get back to this amazing episode. Hey, everybody. Welcome back to This Week in Startups. I'm your host, Jason Calacanis. And my guest today is Tomasz Tunguz, and you can follow him on the Twitter. He's pretty prolific at TTUNGUZ, at TTUNGUZ. His new book, Winning with Data, Transform Your Culture, Empower Your People, and Shape the Future, is what we're here to talk about. And it's by Wiley, right? So it's a business book. That's good. And not that long.
No, about 160 pages.
So you get right to the point.
I do.
So let's get right to the point here, because I, invest in startups, and they're typically resource constrained. And when you're at Google and you got all this money and you got a big money printing machine in the corner that's spitting out $1 million bills, and you're at Facebook and it's spitting out $100,000 bills, you can put 10 engineers on some obscure data set and figure it out.
Right.
But at a startup company, you got 3 people, 4 people. What's the right way for a startup company if you were thinking about, Thumbtack or Uber or Twilio in their first year or 2, let's say when they have under 5 people? Is that the right time to start looking at the data, and how should they approach it? What's your best advice? Because now you're an investor and you probably have some 5-person companies that you're funding.
We do.
Yeah. What's your best advice to those small companies who are resource constrained? Yeah,
the best advice is initially to dedicate some fraction of some person's time to being the data person. And there's 3 responsibilities assigned to that person. The first is you need to educate everybody.
Okay.
And that's a key part that's missing from lots of different businesses. The second part is they need to choose a tool that everybody can access. And then the third part is they need to dedicate time for office hours.
Interesting. So let's work backwards there. I mean, I understand they need a tool. That's obvious, right?
Yeah.
Like you're going to start digging ditches. You're going to have a shovel or a pick or something, or a backhoe. I don't know.
Right.
And somebody's got to be in charge of it.
Yep.
Makes sense. You got to deputize somebody, because if everybody's responsible for it, then nobody's responsible for it. We all know that.
Right.
It's like the 3 people, in the outfield, and the ball, lands between the 3 of them. And it's like, I guess nobody's going to catch it. But this last part, office hours, is the most interesting to me. Office hours is what college professors do.
Yes.
And that was a big part of the culture at Google, wasn't it? Is this office hours. Yeah. Marissa was famous for her.
Yeah. I went to many of those.
Overbearing office hours. How long did you have to wait? Be honest here. You're not working for her anymore.
Just a little bit.
Just a little bit. You're laughing. For people not watching, he's turning red and laughing. What's the longest you had to wait for Marissa? She's made amends about this tardiness.
She's very busy.
She's very busy.
Yeah.
But you would have to wait.
You would have to wait.
An hour or 2.
45 minutes.
45 minutes. I have to say, this is the height of arrogance.
No, she's just busy. It's like,
no.
You have a lot of demands on your time?
So ridiculous.
She had a lot of demands on her
time. To take somebody who went to Dartmouth.
No.
Or Jason Schellen was on this program, and he was making fun of her for it.
Oh, really?
I mean, she was young. She was probably just young, and it was a dumb decision, to be honest. Trust me, the list of things that Marissa's done that's dumb is about 100th of the list of things that Jason Calacanis has done that are dumb. So she's definitely got me beat. But, I mean, talk about a horrible decision to let a Dartmouth graduate wait for 45 minutes, or the co-founder of Blogger to wait for an hour or 2. People were pissed at this. Be honest. Come on, be candid, Thomas.
It was frustrating.
Yeah.
But, she really tried to model it after the way that she had it at Stanford, I think.
Right. Well, it's students, you can kind of be like, they don't have time, but you're paying somebody $100,000 a year to make them wait an hour is crazy. Anyway, putting that aside, office hours. You obviously modeled this after what you learned at Google, correct?
Yes, exactly.
What's the point of office hours?
Well, so we actually observed, when we did our research for this book, we actually observed that this notion actually exists within at Facebook in the data team, and it also exists at Zendesk and a handful of other companies.
Got it.
And the point of office hours is there's a salesperson who is trying to close an account. There's a prospective customer, and they want to sound smart and prepare for the call. And
Got it.
They want to figure out some answer to a question like, what fraction of our customers have grown their account base over the last year, right? To show kind of success for the product. And in most companies, that salesperson is stonewalled at step 0. They don't know where to go, right? Maybe they've taken out an engineer for a beer and they're like, hey buddy, can you do me a favor?
Right.
I'll be your wingman the next time we go out, right? That's kind of step 1. And so what office hours solves is okay, I have this question. Where do I go?
Interesting. So it's basically it's almost like you're giving people this great outlet.
Yeah.
And it's codified in a way.
Yeah.
You just know every week.
Yeah.
On Wednesday, there's a window for you to ask a stupid question.
Yeah.
Because everybody feels like when that data person is constantly being bothered, aren't they? Like their whole life is like, I found with people who have access to the data, their entire lives, it feels like this weird tension of like, I don't want to bother the guy for this data because maybe it results in nothing, or gal. And then it's like, oh, if I, then that gal seems really busy and maybe she or he has a chip on their shoulder because so many people are asking for so much and they don't understand why they want it.
This is the real problem. And then you send in a request and they didn't quite interpret it the right way. And so they send you a data set back and you're like, actually, I needed to do this thing, not that thing.
Oh, and that thing took 2 hours.
Yeah, exactly.
So office hours lets you come and have like a neutral, like nice and easy discussion. And the person then, it's codified, right? Now you really have codified 2 things. This person's in charge.
Yep.
3 things. This person's in charge.
Yep.
The tool we use is this, and everybody has access to it. And you can talk to me at any time between these hours.
Yeah, that's right. You have
very
permission.
Interesting.
You have permission.
Right.
And that's a big deal. That's a big cultural change.
Right. Most companies, the data was something that you would have to ask the CEO's permission for.
Right.
There is a little culture of secrecy around the data.
Yeah.
When you were at Google, without breaking any agreements or whatever how did they look at data in that way? Was there like some sort of like, hey, listen, the data's there. Anybody can look at it. Obviously, you can't look at individuals.
Yeah.
Data like, oh, this is my ex-girlfriend or boyfriend. I'm going to go look at their data.
Right, totally.
Although in Facebook, they busted people. They busted people at Facebook and Google for that, who were doing like little stalkerish kind of things. But how does that get prevented? And how do they deal with that? Or how do companies in general deal with that without you breaking your Google non-disclosures?
It got more and more sophisticated as we went on with Google. And a lot of the sensitivity, at least in the later stages, is around when you're a public company, you can't, people are insiders. They can't disclose certain information.
Right.
There's, there are laws about what you can and can't trade when you know certain data. So I think what
that's fascinating. So somebody, if they if somebody had a large percentage of their net worth in Google RSUs or stock or whatever, and they were looking at the data, they could actually know when to sell their shares.
Yes.
There's a lot of interesting,
Yeah, that's a big black hole of prison.
Be careful.
That kind of stuff.
Well, you know what? It's interesting you say that because I don't know if you experienced this. There are these things called expert networks, right?
Yeah.
Explain what that is, because you were probably getting hit up by these expert networks, and people went to jail over these.
They did, yeah. So there are a bunch of different expert networks. We actually use them today, and what they are is I send an email to my contact. Her name is Katie. And Katie, I said, Katie, I'm researching a company that is building a drone defense company, right? And so what I want to do is maintain my privacy in my yard. And I'm looking for people who know a little bit about privacy and who know about drones who could comment on this company.
Right.
But you could do that in any number of ways. You could ask, I'm really interested in a biotech company, so put me in touch with people at a biotech company. And the risks, particularly with publicly traded companies, is that the people who you speak with disclose information that they are not allowed to disclose. Or make the listener an insider.
Wow, that's fascinating.
Yeah.
So the expert network shields the person who wants the information to a certain extent and the identity of the person who's the insider.
Yeah.
They're trading money for, hey,
knowledge.
Educate me for knowledge.
Right.
But the knowledge could be very beneficial.
Very beneficial.
Right.
And so you just have to be, both parties have to know and be good actors, and then the network in the middle.
Did they make rules about that? Like if you want to be part of an expert network, you have to disclose it to human resources after all these shenanigans got caught in the last 10 years?
I don't know. I was at Redpoint when all the lawsuits came out, so I haven't seen any of that.
These expert networks actually prove the validity of what you try to talk about in your book, which is, hey, there is a lot of knowledge and a lot of signal just sitting there, waiting to be discovered.
That's right.
I mean, it's the reason why these networks exist, right? Yeah. What are some things that early stage startups and tools, what are some of the tools and the techniques that are just easy layups? Things that like when you meet with the startup and they're like, you're at the first board meeting or something and they're like, hey, we haven't done any data. What would you like to see as the investor? Because you're at Redpoint now, you've done 6 investments since you got there. What are the things as a board member, I'm assuming you're on the board of these companies, that come up and say, hey, you got to have at least these 5 things. You got to have at least these 3 things. What are those VCs looking for in your experience?
Well, so I think the first thing is the most important, like if you asked me for one metric that really mattered, it's engagement. Engagement.
Okay.
And so that's what you're really looking for.
What is it and why is it important?
Engagement is understanding how your users use your product and why they use it in a particular way.
Okay.
And
Give me an example with a popular product. Like, we're talking about Instagram or something.
Yeah.
Or Snapchat.
Instagram are like the key metrics for Instagram and Snapchat, I would presume, are daily active users.
Okay.
The number of people who use it on a daily basis.
Makes total sense.
The session time.
Okay. Which is how long they use it.
How long they use it.
Got it.
And even the number of sessions per day.
Ah, interesting.
And so what that tells me is if somebody's coming back 5 times a day for 10 minutes at a time, they're basically spending an hour with me. That's a pretty amazing thing.
They're addicted.
They're addicted, right? And then as an investor, I can look at that and say, I can extrapolate from here to there. If a small number of people are this addicted, then that must mean that, a large number of people could be.
Right. And you could actually look at that group, which I think in our industry we call cohorts.
Yes.
You could look at that cohort of people who come back 5 times and start to study, what are they doing, right? Because then you could say, hey, is there something unique about this group of people that we could then message to the other 90% who don't open it 5 times?
Yes, exactly.
Yeah.
Yeah. And then other things you want to track are like product usage flow. So I release a new sign-up flow. What is the impact to all those metrics, right? Or when people leave my application, when do they leave? Or which screen are they leaving on?
Got it.
That kind of stuff. And so instrumenting the product, I think, is step 1.
Right.
Because then you can have a whole bunch of conversations around, hey, what do we prioritize in our product, which is the goal from seed to Series A, figure out what product you want to build, what does fit.
Explain that, because that's interesting. From the seed to the Series A, you're saying is what to prioritize in our product.
Yes. So
unpack that a bit, because I think that's actually kind of insightful.
Well, so whenever you raise a round, you're basically proving a hypothesis, right? Okay. And so at the seed, you raise money in order to take an idea and make it.
Got it.
Right?
So you raise $1 million and then you make the 1.0.
Yeah. And then you have a small number of users who like it, presumably, right? It's working out.
A couple thousand people a day, whatever.
Yeah. And then you raise the Series A and you're trying to figure out, okay, how do I get this to go from 1,000 to 1 million? And so that's when data matters. Because it's not like you can use data to figure out at the beginning. It's not like you can figure out, like you can analyze a bunch of stuff and say, okay, the next Instagram or the next Snapchat is going to have these characteristics because I use data about Instagram and Snapchat usage. I can't use the data that way in order to get to the next product, right? I need ingenuity, creativity. But once you have a product in market, in people's hands, then you can use data to fine tune and optimize, right? And so that's when you go from seed to Series A, a lot of those dollars are spent on instrumenting the product, like growth hacking, marketing, product development, engineering. It's really all to get the product go as fast as possible.
And what happens between Series A and B and C? How would you describe those and what would be characteristic of what people are trying to prove?
Yeah, at the Series B, when you raise a Series B, you want to have a more complete management team because you're really selling the team. And then the other thing, ideally, that you're telling investors at the Series B is just add water.
Just add water.
Or just add money.
Right.
Like that's position.
This is concentrated power. We've got 5,000 people using the product every day for an hour each. They're addicted.
They're addicted. And so it's a straight line from here to infinity.
It's clear.
Right.
Yeah. So like we're Slack, we're in 100 organizations. And once we get 5 people in an organization, we get everybody. They'll never get rid of it. Yeah. Once we get 3 integrations, in Twilio, in a product, they'll never take us out, and they're going to be at least a $1,000 a year client.
Exactly right.
Something like that.
That's the goal. And then you have the management team to scale it. You've got a good VP of sales. You have a good VP of marketing who can build the organization with the money in order to capitalize on that opportunity.
All right, Tomasz, Tom, when we get back from this very important message, you made some predictions at the beginning of the year, 3 of them, in fact. And we're now, halfway through the year.
We are.
What an exciting year this has been. Isn't 2016 been crazy?
Crazy.
Just like in our industry and the world in general.
Yeah.
When we get back, we're going to talk about these 3 predictions. You're going to show them, and then you're going to own them on This Week in Startups. Hey, everybody. I want to take a moment to tell you about retargeting. This is a very, very important thing for startups to understand because customer acquisition is what it's all about, and AdRoll is the best retargeting platform on the planet. Over 25,000 advertisers use it. And I want to tell you today about a new product they have. It's called Send Roll. No, it's not sending to get you rolls and buttered rolls. No, this is about email. And Send Roll lets you get all those people who are window shoppers, people who are checking out your website, and then you can convert them into buyers, which is what you want, getting them to sign up for your product or service by email. So imagine they visit your site, but then they get an email follow-up. SendRoll is powerful retargeting tech plus effective emails, and the results have been spectacular. The average SendRoll gets a 45 to 60% open rate and a 10 to 20% click-through. And I can tell you, running inside.com, that is probably 3 times, 4 times the industry average. And it's so easy to set up a SendRoll campaign. It just takes minutes. They give you all the templates, and they have a 24-hour, 7-day-a-week customer service line if you need help. And what I always like to do when we have somebody who has a product that's loved on our program, we don't want to read any sponsor messages, any partner messages for things that are not loved. The great part is a lot of my founders from my portfolio use AdRoll, so it's very easy for me to talk about their new product, SendRoll. James Heller, the founder of Rapify, which went through my incubator, says AdRoll is an integral part of our customer acquisition strategy. It allows us to continue to garner impressions long after the initial customer interaction. It's also one of the most cost-effective tools to bolster any integrated marketing strategy. AdRoll is the best retargeting platform, period. That's according to James Heller, good friend of mine and one of my investments at Rapify. So here's your call to action, everybody. Try SendRoll and get a $100 credit. Just go to adroll.com/twist, 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 and get that $100 credit. And please try that SendRoll and give them some feedback and let them know that @Jason sent you. Okay, let's get back to this amazing program. Welcome back to This Week in Startups. I'm your host, Jason Calacanis. You can follow me on Twitter @Jason, on Instagram @Jason. I'm starting to use Instagram Snapchat ripoff. God, it's the greatest ripoff ever, isn't it? Have you used this Instagram Snapchat ripoff?
It's very similar.
It's incredibly similar, and it's better.
It's better. But
why is it better in your mind? I'll tell you after you tell me.
There's a strategy in sailing. There's a competitive strategy in sailing, which is whenever you're ahead, you copy the move of the person who's immediately behind you.
Wait. I don't know.
If you're ahead in a sailing race.
Got it.
In a 2-boat race.
Got it.
What you do is you keep an eye on the guy behind you and you copy his every move.
So there is no edge he can get.
No. Because everything he's doing is you're doing.
That is so effing genius. Are you a sailor or you just picked that up?
No, a buddy of mine was a sailor in college.
So you mirror them, so there's no advantage. You're negating
advantage.
any advantage.
Yeah.
The advantage would become de minimis.
Yeah. If they make mistakes,
But actually, because there's no chance that they're going to close the gap.
No.
Because the behaviors are the same.
That's right.
Wow.
Yeah.
That is so interesting.
So what
do you think is better in it?
I don't use Facebook.
Okay.
So
you don't use Snapchat, you mean?
I don't use either.
Yeah.
Yeah.
What's very interesting about it is the biggest problem on Snapchat, and what some would argue is the strength among millennials, is discovery.
The learning curve.
There's a learning curve, right? So there's like the opaqueness of how to use the product. There's no tutorial. You have to have somebody show you. So you kind of join the Snapchat club, which meant the club stayed a little bit like amongst the kids for a long time. And now you got like these like old VCs like me, Saka, and like all these embarrassing people like Justin TV and me, like all the 40-year-old like old farts, over 35 are on it.
Yeah.
And so we're like ruining it, but we finally figured it out in year 3 or something or 2.
Yeah.
But what's interesting was so there's that piece, which is it's too hard, and you can't find people. Everybody has these obscure names, and there's no directory really.
So how do you find somebody?
Either you have to have their phone number and put them in the book, or you have to like go explicitly ask them to give you their Snap code, which is why people take screenshots of that weird Snapchat barcode.
Oh.
So you take a Snapchat of the barcode, then Snapchat looks inside your phone thing for snap codes, and then you can say, oh, I snap coded these people.
Whoa.
That's why you see people sharing that image.
Yeah.
So it's almost like it's like a secret password to get in, which makes it kind of fun.
Yeah.
It also makes it incredibly annoying. And when you compare it to Instagram and Facebook are in cahoots. This is where like that acquisition became so
leveraged.
Yeah, and accretive because when you're on Instagram, it's like your Facebook friend has joined Instagram.
Yeah.
It's like, oh, what an advantage that is. Like, I'm already friends with you over here, and you're alerting me to it over here.
Oh.
Or when you post your Instagram and you post it to Facebook, it just shows the photo. When you post it to Twitter, it doesn't show the photo.
So do you think that bit of product, like this discovery in Snapchat, is that a feature?
It's a feature for kids who are hiding from their parents.
Oh, got it.
But it is a gating factor to oldsters, as Bob Lefsetz would say.
Two sides of the same coin.
The oldsters the old farts can't figure it out, so therefore they're frustrated with it.
Yeah.
If I want people to find me on Instagram, I go Instagram.com/Jason.
Yeah.
Or do a search for Jason Calacanis or Calacanis. You'll find me. There's a search feature.
Yeah.
There's no search feature on Snapchat because they don't want you finding people doing salacious, crazy shit. Right?
Taking photos and videos of it.
Right, exactly.
Yeah.
That's the whole point of Snapchat. Is and there are some accounts that are doing crazy stuff. And I get the really crazy thing. So anyway, now my 12,000 followers or whatever on Instagram, it's like I have 12,000 followers on Instagram. 1,000 people watch every video I post.
Amazing.
So I'm getting almost 10% to watch it already of my follower base.
Wow.
On Snapchat, I was getting like 500 to 1,000 people to watch it.
Is it harder to build an audience on Snapchat?
Much harder.
Much harder.
Because of the discovery problem.
Yeah.
So they're just going to leapfrog them. It's very interesting on a data basis and a product design basis, like back to your mirroring of selling.
Yeah.
What's also interesting is you blog every day, huh?
I do.
What is your blog?
It's Tom Tunguz, TomTungus.com.
Yeah. So go to Tom Tunguz. It's Tom, T-O-M, Tunguz.com. And my guys are always...
thank you very much for the support.
They always put you in the launch ticker. Well, there's no thank you necessary because I tell them to pick the best 3 from the VCs based on merit.
Yeah.
But you're a good writer.
Thank you.
And you have a point of view, so they pick you. But I have to tell you, it's caused controversy in my life because people are a little jealous of you, I guess. People get jelly in the VC community of people who get high profile. Your profile is a little higher than maybe your time as a VC or your success as a VC. You would agree.
I agree.
And blogging does that, right?
It does, yeah.
And so somebody was like, how come you list all this stuff? You don't list my stuff, blah, 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 blah. And I was like, hey, dumbass. I have never met this Tomasz Tunguz. I couldn't even pronounce your name before today.
Yeah.
Tomasz. And so I'm like, I don't even know this guy. And by the way, I read the launch ticker.
Yeah.
When everybody else reads it.
Yeah.
So everybody's like, oh my God, Jason, you're like at your thumb on the scale. I'm like, guys, I've never met the writers of the launch ticker in person.
Yeah. Oh,
They're all remote writers who we hired based on their ability.
Wow.
100%. So I've never met them. I mean, they work for me. I could fire them. So there is that. But I've never met them in person. I talked to them in a chat room. They're hired based on merit. We just give them a writing test.
Yeah.
We test their tech knowledge and we fire them if they make too many spelling errors and too many factual errors. It's a very simple process.
Yeah.
Just hire great people, fire them if it's all performance based.
Yeah.
But I don't see it till it comes out.
Yeah.
So like, oh, you're writing about Uber too much. I'm like, okay, guys, Uber's in the news constantly.
Yeah.
Like we write about Airbnb constantly. I'm not an investor in that. This is ridiculous.
Well, you do a lot of things. It's easy to identify, think about you behind each one of these different, right? But
that's people's minds.
That's people's minds.
Right. That's why I put in the bottom. Yeah. In the footer now, it says, hey, Jason's an investor in 100 companies. You can see it here.
Yeah.
He reads, and I wrote the language myself, which is Jason reads the ticker when you do.
Oh, that's really smart.
Just so you know, like, I don't have the time or the energy to do this. No. But anyway, congratulations. Everybody should check out your blog.
Thank you.
Tom Tunguz, but it's Tunguz is how you pronounce it, but Tunguz. All right. Now, one of the things you did was you did predictions. Everybody loves predictions.
Love predictions.
Everybody loves rampant speculation.
Yep.
Great.
Based on...
Most people are not willing to do it.
Well, it's very dangerous because you're often wrong.
You know what the good news is?
What's that?
People don't remember when you're wrong, but they remember when you're right. And you can actually...
Nostradamus.
Listen. It depends on who... You can spin it because here's the thing. We do rampant speculation on this program.
Yeah.
So what I'm thinking about doing...
Yeah.
Don't tell anybody.
Okay, well...
I'm going to have one of my new producers. We got a new associate producer here. I'm going to have her go and look at the news program from like 2 years ago or a year ago and have her cut the instances where I'm right.
Yeah.
And then...
Do a best of?
And we're just going to do like, here's Jason being right.
Yeah.
And then I'm taking all the old episodes offline. Right? So all we'll have left of all the news programs from the first 5 years of the program is me being right.
Yeah.
We take all the other shit down and we make a supercut of me being Nostradamus.
History is written by the winners.
It's so sinister and genius.
It's marvelous.
Emmy award-winning producer Jackie, take a note. Let's do this. Okay, moving on. Listen, we're having a good time here. I like this guy. Yeah. Tomasz, let's see your deck.
Okay, cool. So in January 2016, we published an investment outlook with 3 key trends in 2016. The first was, unlike the previous 2 years, growth and unit economics are going to matter. And in the 2 years before that, growth only mattered. So it didn't matter if your unit economics were good.
Right.
You could still raise lots and lots of capital.
Correct. And let's explain to everybody what unit economics are.
Yeah. Unit economics are if I'm selling a coffee cup,
Right.
positive unit economics means every time I sell my coffee, I make 10 cents. I make a profit.
The unit is the object you're selling.
That's right.
Okay? 1 unit, right? So that would be an Uber ride, an Airbnb host, an Instacart delivery, a Sprig delivery of food.
Yes.
The one little microcosm of the product operating.
Yes.
That's the unit economics.
That's the unit. And if sometimes I can make a profit on each unit, I can make money on each unit.
Right.
Given everything that it costs me to provide the Uber ride, which is paying the driver and advertising and all that stuff. Or sometimes I can lose money on each unit, which means I have a very challenging business.
Because
for every coffee cup I sell, I lose money. I lose 10 cents.
So if you grow, what happens?
I lose even more money faster.
So why on earth would anybody ever have negative unit economics? Why wouldn't this seems completely illogical to do. What's the logical reason to have negative unit economics?
Because for some companies, you can grow out of negative unit economics.
Got it.
You can start with an unprofitable business on a unit basis and grow into profitability because there are something called economies of scale.
Right.
And so
Which makes total sense.
Yeah.
What's a great example?
A great example is Netflix. So when they were doing the DVDs, right? Like you have this huge facility, it's 100,000 square feet. You got some people picking, packing, shipping the DVDs. If you only got one person buying those DVDs, you're going to lose money hand over fist.
Right, because you have a $10 subscription, and if the cost of that facility was $1 million,
yeah, you're losing $1 million.
You're losing $999,000,
Yeah, exactly.
But if you get 1 million people there,
all of a sudden,
10 million in revenue, 9 million in profit.
There you go.
So you can lose money in the beginning until you cross the fixed cost of the business.
Exactly. Are you an economist?
No, but you know what? I'm an idiot who invested in a bunch of companies, and then they explained to me why I made so much money off of them after the fact. They're like, hey, Tomasz. They call you Tomasz, they call me Tomasz. No, but seriously, that's how you learn it, is like
how you learn
the hard lesson.
Yeah.
But something got perverted, didn't it, in the last couple of years?
Yeah.
In that the success of Airbnb, Uber, Dropbox, it created a little bit of... what would you call it when everybody suspends disbelief?
A bubble.
A bubble.
Yeah.
Correct.
And that is not a bad word.
Explain why it's not a bad word.
It's not a bad word. There's this great book that Fred Wilson recommends, Carlota Perez. She wrote it. It's called...
Carlota Perez. Don't worry.
Perez.
Emmy award-winning producer Jackie.
And I forget it. But I just read it, and it's kind of more embarrassing. But she talks about how... there's basically two different cycles. When you have a new technology, there's like railroads and telephones and technology. There's two different cycles. There's basically the invention phase when everything is created, and there's the deployment phase. And the bubble happens in the invention phase. And what ends up happening is people get really excited about drones or on-demand or, I don't know, machine learning. And so they pile a ton of money irrationally into those businesses.
Got it.
And all that excess capital enables a bunch of innovation to happen. And so, but you need that excess in capital in order to attract people to work on the problem, to make big advances. And then at some point there's a collapse and a recession, but then the infrastructure is built and then you can capitalize on the opportunity again.
Got it. Here is the AVC article, required reading for the Carlota Perez interview. He blogged about doing it, blah, 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 blah. Yeah, here we go. You can watch.
It's a fascinating book to read. And there are very few like economic historians who can write in a way that's not academic.
They can make it interesting. Storytelling, yeah.
Yeah, it's really cool.
And so we had a little bit of a bubble in the on-demand, the sharing economy over the last couple of years. So you predicted in your deck, back to your deck, we'll pull up your deck here.
Yeah.
You predicted that growth is not the only driver. Unit economics will come into play.
Right.
It's pretty obvious that that was going to happen when we saw the on-demand get clobbered. I mean, people stopped being able to raise money.
Yeah.
And companies started to, even the Ubers of the world, the Lyfts of the world, and even the Instacarts of the world, they started to think about, hey, when does this become profitable?
Exactly. Yeah. So this is a little bit of a T-ball prediction.
Yeah. You kind of, but just based on the timing, because I would say that 6 months before that, it was pretty obvious that everybody had to start changing the way they were because the funding was starting. There is a cycle to funding, isn't there? Like, who funds these companies?
There is a cycle. Yeah.
And who does it, I think, is kind of interesting, right?
Yeah, and that's changed, right? 2014, 2015 were two of the 5 biggest years for venture capital fundraising in history.
Amazing. And everybody said the venture business was dying.
Yeah, and then all of a sudden, boom. Well, there's way too much money looking for way too little return. That's kind of the net. And so people are looking for more risk. A lot of risk in venture capital because risk equals return. Not always, but most of the time. And so there's been a ton of money coming in.
So because of the monetary policy that's going on in the world where you put money in your savings account and you get nothing.
Nothing.
Or it seems like now they charge you fees. So literally, I forgot that I had a savings account.
Yeah.
And my wife's like, hey, Tomasz, Jason, you just realized you lost like $8 a month. You lost $120 with your Bank of America account because you had a savings account that had a minimum.
Oh,
and in the other accounts, you have all this other money. And if you just put like $1,000 in that account, you wouldn't have lost this amount of money. And I'm like, I am a Tomasz. But the people who are investing is also very interesting. I find like the Chinese are coming into Silicon Valley.
There are a lot of
hedge funds, mutual funds. They're dipping down. Why are they dipping down and investing in the Ubers, Airbnbs, and late stage companies?
Well, I think.
Or why did they?
They did because rewind 3 years ago, they started to invest in pre-IPO in the rounds immediately before the IPO because they figured they could get a better return than waiting until the IPO. There wasn't that much of a difference between a company raising a pre-IPO round and a company at IPO. In fact, a lot of these investors could ask questions of a private company questions that the company could disclose when they were private, but they couldn't disclose when they were on their IPO roadshow.
Got it.
So they actually know more about the businesses. And so then they started investing a lot in those rounds.
That's counterintuitive. You're saying when they're private, they had more access to data.
Yeah.
Or could, and probably more access to management.
Yeah.
And when they're on the IPO, because there are these very long-standing rules, they get a little bit less access.
They get less access. And the challenge is, once a company discloses a metric once, or a key number once, the public market investors can continue to ask for that in the future.
Oh, really? I wasn't aware of that.
So, so I'm not too familiar with the disclosure requirements. This is what a late-stage investor told me. And he basically said,
once you open the Pandora's box of, hey, this is our revenue per stay if you were Airbnb, or revenue per host, your investors have the right to, hey, you brought up the revenue per host 6 months ago. I haven't heard about that.
Yeah, and if you don't show it anymore, what's wrong?
What's wrong?
The metric must be going south.
Alarms start going
off.
Sell. Well, yeah, exactly. Hey, let's talk about your next prediction here. Let's pull up your deck here. So the first one you teed up. Okay, that's fine though.
Yeah.
So what's this next one here?
So the second one is that the public market is going to put pressure on prices in the private market.
The public market will put pressure on prices in the private market. In other words, whatever happens in the public market, if the stock market goes down, which it did in the fourth quarter and first quarter, we had some rough waters. People were very nervous.
Very nervous.
Would put pressure on the private market, and the private market absolutely correlated.
It did.
But a little bit delayed, like our sailor metaphor maybe?
Yeah, delayed, but only in the late stages, actually. So we have data for that. So this is
here we go.
Cooley's data on Series A, Series B, Series C, and Series D in later rounds.
Got it.
And this is the average pre-money valuation. So the value of a company before it took investment.
Got it.
Over the last 6 years.
Got it. So when we look at it, 2009, Series A's were at the 5 million level.
Yeah.
And then something happens in 2014. 2012, it goes up about 50%. We start seeing those $7, $8 million Series A's on average. And then boom, 2014, 2015, 2016. Oh my goodness. $15 million is ridiculous.
Very expensive. Yeah.
And basically when you think about that, just for people who are playing along at home, I had a conversation with a company from Y Combinator, which I think was a major driving force in all this. You would agree?
Yes.
You're nodding. You just want to get banned from Y Combinator. By the way, update, newsflash, breaking news. Yesterday, I'm at a party.
Yeah.
I get an email. We'd love to invite you to come to a Y Combinator demo day. And what happened to the ban?
You were banned?
I was banned because I was banned.
Yeah.
Here's the thing. I thought I was banned.
Yeah.
Because I publicly was a little critical.
Yeah.
I'm publicly critical of everything.
Everything.
I'm a loudmouth. I talk about everything. I'm publicly critical about myself. My whole brand is to be an honest guy, right? Like just blunt. Like, oh my God, Marissa, what a horrible job she did in the last 2 years. And I was like, hey, what a great start she was off in Yahoo, right?
Yeah.
I think that's the reality. She did a great job in the beginning, got everybody excited.
Yeah.
And then she executed horribly for the second half of her tenure.
Yeah.
So if you put those two things together, maybe she did an okay job.
Yeah.
I am so candid that when I meet with founders and they tell me their startup is $15 million valuation or $10 million valuation, and the Y Combinator startups are typically 50% to double or triple reality.
Mm-hmm.
You would agree.
Yeah, they're the highest quality, and so most of the time the highest
Yes. So
price.
They tend to be. But I find as much quality outside of Y Combinator as I do because I have good deal flow.
Yeah, basically they're highly filtered, right?
They're highly filtered.
And so when investors come, there's tend to be more of demand for those companies, which pushes prices higher.
So and I believe that the demand is artificial and manufactured by the demo day concept. So I was very public about this.
Yes.
And I said, hey, listen, I'm not interested in investing with competing against a bunch of dentists. So I always tell these companies, they're like, we want you to invest. And they're so entitled that literally one company sent me $100,000 DocuSign just after I clicked, showed interest. And they're like, well, we just took the liberty of sending you the DocuSign for $100,000. And if you want to do that, you can change the amount, but we think you'd be the perfect investor. And I was like, I'm like, we haven't even met.
You hadn't met them?
No, I just indicated that I might be interested, and they were like automatically sending me the DocuSign.
I was trying to make it easy for you.
I'm like, I talk about jumping the fences. People have totally left the reservation. What are we talking about here? So then I say, like, hey, we can meet, talk to my assistant. We'll meet in 2 or 3 weeks. I'm an old school guy. I got an assistant. I got a process. I want to do 2 or 3 meetings before I give you my money, and I give you other people's money, so I take a little due diligence.
Yeah.
And they're like, the round will be closed by then. And I just 100% of the time I say, okay. You know what happens?
No. They come back.
100% of the time, it's manufactured artificial pressure. And their round's not closed 3 weeks later, 4 weeks later, 5. It's,
And then do you take the meeting afterwards?
Of course I take the meeting. I take the meeting with any founder. But the problem was, the reason I got banned is that I was so candid with some of them that I think they get to review you, the founders.
Yes.
And so I don't sugarcoat it. I tell founders, you want the blue pill, the red pill? I told them, like, listen, your valuation's crazy. I don't think you're going to close, and you have no lead. I would pay like $4 or $5 million for this company, like objectively, if we were just met on the street and not at Y Combinator. Like, you're not going to close 8, 9, or 10. Of course, I was right in like these cases, but of course, that gets me a bad review from some founders.
Oh, I see.
So then I'm like, you know what? I'm going to meet with Y Combinator founders, but this is just a message to Y Combinator founders. Here's what our meetings are going to be like now. Oh my God, this is the greatest idea ever. You are a unique and beautiful snowflake. I am so impressed. This product is amazing. High five. Slap. I'll get right back to you. And then when I get back to them, I'm going to say, you know what? It's not a fit for me right now, but I am going to be rooting for you from the sidelines forever. And I'd love to keep in touch. Let me know how I can help. That's literally they're going to get Snowflake Jason.
Oh my gosh.
I'm going to channel my new Snowflake Jason.
I can't wait to see it.
It's going to be amazing. All right, here we go. Back to you, Tom.
Okay.
Sorry to go on a little time.
No,
but
awesome.
the audience needs to know what's going on, because this is the thing, back to like, if you disclose something, if I'm going to disclose something, I got to go full disclosure, because I don't want anybody to think I'm a hypocrite.
Right.
But should I go back?
Should you go back?
Yeah, now that I was banned, I didn't go to one. Do you think I should go back?
I think you should go back.
Why should I go back after they insulted me and banned me? Me, the greatest angel investor on the planet right now.
I think it's an olive branch. And
it's an olive branch. I should take it.
You should take it, and you should bring an olive branch.
I'll bring donuts. That's
Even
it.
better.
Fuck it. I'm bringing
Everyone
donuts.
will be happy.
That's what I'm going to do.
Yeah.
That'll be hilarious. If I show up with donuts.
Yeah, bring donut holes. Everybody loves donut holes.
I'm going to bring Emmy Award-winning producer Jackie. Take a memo. Jason's going to go to demo day, but ask my executive assistant to bring 10 dozen donuts, and I will walk in with 10 dozen donuts.
What an entrance that will be.
Hilarious.
Hilarious.
All right, let's go to your next prediction. So your prediction was right. Let's go back to this late-stage market stuff here.
Yeah, but in the late-stage market, in the Series D and later, unlike
look
earlier,
at that.
There's a substantial decrease. So almost a 50% decline in about 4 quarters.
Because it's showing in 2015 Q2, $400 million for Series D, and then, hey, back to $200 million, which, by the way, we were in that 180 range multiple times over the last 2 years.
Yeah.
The Series D means your company is on the way to being a unicorn if you get a Series D.
Yeah.
But on the way,
yeah,
but maybe a third of the actual peak price.
Yeah.
And the D, you said before, was very close to being the public market.
Yes.
So that's why it's correlated in your mind?
Yeah, exactly. So we ran this analysis. So e-commerce companies and SaaS companies in 2013, 14, and 15 in the private markets were worth twice what they would get in the publics. So the same company, like if I had Unicorn A, and if it were to raise money in the private markets, it would raise it twice the price.
Box. Twilio were worth more when they... No, Twilio became worth more after.
Twilio's worth more after.
Box went down after because they had to do a make good. The last round was higher. My understanding was they had to do a make good.
That could be. I don't remember.
They triggered some make good conditions.
Yeah.
In other words, people had invested at a level privately that if they went public at a lower level, they clawed back, which essentially meant they issued them extra shares.
Exactly.
So if they invested at a $5 billion valuation, the company was worth $4 billion, they got topped off with 20% more shares to make up for the difference.
Yes.
So that actually correlates with it. So you got that one right. You nailed it. Makes sense. Okay, let's go to your number 3.
And the last one was you'd see a lot of M&A.
Well, you got that one. That is...
On fire.
It's on fire, M&A.
Unbelievable.
For good reason.
Yeah. So, and the reason was, this analysis is about 6 months old. When we made the prediction, it was about $380 billion in cash on these companies. It turns out that tech acquirers now have about $650 billion in cash.
Yeah, I just did a whole blog post on this, and
you did? Okay.
I did just the top 6 have 450.
Yeah, it's stunning.
It's stunning. So here you have software companies going back. We'll go back one.
Okay.
Here we have $380 billion cash for software acquirer. These are just software companies.
Just software companies.
So it's leaving out the big one, Apple, which has over $200 billion in cash and cash equivalents.
So that gets you to close to 600.
Which gets you close to 600. And Microsoft is at 100. It's so interesting. Everybody's like, oh, Microsoft's irrelevant. It's like Microsoft is $100 billion in cash.
Yeah.
And every quarter they're printing a couple more billion.
Yeah.
Google is now over 80. This data must be just a quarter old or something.
Yeah,
Cisco, massive amount of cash. There's just tons of cash sitting there. And these companies also have the ability to draw down on bonds at 0%. You know, you look at something like Amazon, they don't have a ton of cash.
Yeah.
But
they can borrow. They
can borrow against $30 billion a quarter in sales. And at any point in time, they could be profitable, right?
Yeah.
Based on data.
Yeah. Based on
Which company is the best data-driven company today? Who's using data to make the most money? In other words, who is able to like actually turn data into money?
I think Google and Facebook are the best.
Why?
They have network effects in their businesses. And
Explain.
So, well, the bigger they get, the more. So, like Facebook's a really good example, right? Like the more users Facebook gets, the more valuable Facebook becomes. The more information they have on those users, the better they can target ads.
Got it. So it's a massive flywheel. You're spinning your hand here. Hey, if they get more, every time they get another user, they get more data.
Yeah.
Every time they analyze that data and provide that data to advertisers, their ads get more effective.
Yes.
Therefore, the ad inventory is not wasted.
Exactly.
That's one of the very interesting things, right? Because Google did not, if you bought ads on Google, and I bought the keyword, I don't know, Hawaii vacation because I wanted to sell them a Tesla because I figured, oh, Hawaiian vacations, those people can afford Teslas. If they don't click on the Tesla ad, what does Google do?
Google doesn't show the ad.
Right.
So they lose potential money, right?
They potentially lose money, but the inventory becomes more efficient.
Yes.
Therefore, ultimately, it's better for everybody.
That's right.
Whereas when Tesla buys ads, or Tesla doesn't buy ads, bad example, but if Mercedes bought ads on Business Insider, they don't know who's seeing it.
No,
they bought Business Insider.
Yeah.
The display ad racket is one of the reasons why Yahoo collapsed. Because they had a display business, not like a very scientific business.
Yeah. Yeah. We were competing with them. At Google, we were competing with them. And one of the stories in the book actually is a story of how we used the Google search crawler in order to figure out what the relative market share was. Because we were crawling all these web pages so we could see which ad code was running. And so we could tell you every day what was the relative market share of AdSense versus Yahoo Publisher Network.
Gotcha. Right. And you could actually see the publishers taking Yahoo Publisher Network off or
putting it on.
Putting AdSense on. Yeah, I always kept people on their toes with Engadget. You probably remember.
Yeah.
I was like a little bit of a noisy.
Because you were rotating.
I would rotate.
Yeah. Exactly.
I would also be like, yeah, I'm giving you 30% now. I built a system that would dynamically show it.
Oh, awesome.
And you guys were like, I don't know. And I was like, we don't have an exclusive. And they were fine. But then Yahoo Publisher Network wanted an exclusive.
Oh.
So they were like, oh, we want Engadget, we want the slot. And I was like, yeah, I'm just rotating them. And I could literally go into an interface that my partner Brian Albee had built and said, 40% AdSense, 40% Yahoo Publisher Network, 20% this other click network, some other, person making ads. And then what I would tell them was like, Would you like a higher percentage? Well,
Yeah.
I'm looking at the numbers and I'm not happy with what we got last month. So you want to make good on last month and top me off? Or you want to give me a guarantee that I'll hit this CPM next month and I'll raise it? And they would.
They would.
So, oh, yeah.
Wow.
I had influence.
Yeah. We still have more influence than ever.
Maybe not as much as I used to.
You just got invited to YC Demo Day.
Yeah, wow. Look at me. Oh, my God. Well, what next? I'm going to be invited to speak at TED. Incredible. You know what the thing is? At a certain point, you've been to everything, and then you just don't care.
Yeah.
Like, I've been there. Like, going to TED, like, why would I even care? Like, oh, my God, I'm going to cry about mosquitoes or some bullshit. Like, you been to TED?
No.
You're like one of those TED guys.
No.
Not a TED guy.
I like listening to the talks. That one about education. That one's really good. Sir Ken Robinson.
That's the best one. I love that one.
Or the woman with the brain.
I don't know that one.
She's a neurosurgeon, suffered an injury to her brain.
Oh.
And so she kind of like has a scientific lens on what's actually going on while she's experiencing it. She can describe the emotion and the medicine. It's pretty cool.
You want to hear a funny TED story?
Yeah.
So I like telling little funny, like out of school stories. So the TED guys are like, hey, we're thinking about doing blogs back in the day.
Yeah.
So I meet with them.
Yeah.
I meet with Chris Anderson, nice guy. We're friendly. We know each other. We play cards sometimes. Please come to my poker game. And I asked me a bunch of advice. I'm like, should TED do blogs? I'm like, yeah, of course. I was like the blog king at the time.
Yeah. Yeah, of course.
It was like, early days when people listening to the show they were in high school at that time. A lot of these new founders, right? Time goes by. They don't even remember what I did back then. So then I'm like, and Chris is very gracious. Hey, anything I can help with? I was like, yeah, I don't know. He's like, oh, you going to TED? I'm like, no. I don't. Oh, you want to come to TED? I was like, yeah, maybe I'll go. He's like, oh, let me work that out for you. I'm like, oh, wow. Maybe I'll go to TED. Great.
Yeah.
Maybe I get a free ticket, right?
Yeah.
I get a call from his guy.
Yeah.
Guy's like, oh my God, we are so excited to have you coming to TED.
How nice.
This is going to be amazing.
Yeah.
And we have a spectacular opportunity for you to be involved. There is going to be a pre-dinner. We'd love to have you at the pre-dinner. There's going to be this other Google party going on. And not everybody can go to that, of course. It's a small dinner. And I was like, oh, that's great or whatever. And I said, yeah. And I'm going to send you the paperwork now. And it's 10 years of TED. So you are going to be a VIP, gold, status, emerald, diamond.
Oh my
gosh. What the fuck this is. I'm like, wow, this is incredible. And I said, oh, okay, great. How does that work? He said, well, you send us $100,000.
For the privilege?
For 10 years. I'm like, I thought the tickets were $6,000. At the time, they were 6 or 7. I was like, oh, no, the tickets were $7,500, whatever it was at the time. This is 10 years ago.
Yeah.
I'm like, okay. And I was like, so I'm sending you a third more in advance for 10-year tickets. Well, maybe I'll just buy a $7,500 ticket for this year.
Yeah.
That was a lot of money for me at the time. And they're like, oh, those aren't available. I'm like, well, obviously they're available. If you've got a slot for me for 10 years, you probably have a slot for me for 1 year. But I mean, I'm not a rich guy. I mean, I have some money, but I mean, $100,000. I'm like, yeah, that opportunity isn't available right now. But this other opportunity, it's like,
oh my gosh.
It's not, here's the thing. Like, I'm not the smartest guy, but I kind of know there's a difference. Like, money has value. So if I'm giving you $100,000 ahead of time, I said to him, like, maybe, how about I give you $15,000 for 3 years? So I'll give you the $15,000 now. You get 3 years, so I get a discount.
Yeah.
Like, oh, yeah, that opportunity is not available.
Are you serious?
It was hilarious.
Oh my gosh.
And then I was like, you know what? I'm going to stick with I like being an outsider a little bit more. So I was like, I'm going to stick with my outsider thing. Like, I prefer not to be invited to TED, but then I go to my agent, John Brockman, who's, Jared Diamond's agent or whatever. So I'm going to go to the billionaires dinner, which is 100 people.
Yeah. Out
of the 1,500 at TED, and just piss off all the TED people because they would be like, they'd see me at that dinner and they'd be like, oh my God, what are you doing at this dinner? Brockman's billionaire dinner. That's my book agent. Of course I'm going to be there. So I just go to that dinner. All right, listen, you have to go.
I got to go.
I know. You've been a good guest. I'm going to have you back for the roundtable. Would you do the news roundtable sometime?
I'd love to. It'd be fun.
The news roundtable would be good for you because you're a little bit honest now. Did you always have that honest gene where you like to be blunt about stuff?
Well, I try to be genuine.
All right. You like to be genuine? Okay. So tell me, what was the stupidest thing you ever saw happen at Google? Give me like what that time you were there. There must have been some wacky stuff during that period. What was the wackiest, craziest Googleist kind of thing you saw? Biggest waste of money or crazy?
Oh, we rented out Disneyland. I got to ride in Space Mountain. There was no line. We were 2 or 3 people.
The whole company rented out Disneyland?
Well, not the whole, just, I think one office rented out Disneyland. And I got
You can rent Disneyland?
Yeah.
Close Disneyland.
It was only Googlers. There were like 4,000 of us in the park or something.
You can close Disneyland.
Well, we did. And
you break all those kids' hearts, huh?
Yeah. All those kids were standing out by the fence and we walked
just
past
looking
them.
in, going, look at those Googlers.
Let me in.
And Bernie Sanders was there going, the 1% of the 1% of the Googlers have shut down the wall. That's hilarious.
That was fun.
Do you miss working at a company as opposed to being a VC? Or?
I love being a VC.
You do? Why do you like it?
It's a real privilege. I get to meet lots of really smart people. And you can ask them all kinds of stupid questions and they will respond politely.
You know what the thing is? I have to say, you seem like you get your head on straight because it is a privilege to not have to like stay up at night and grind your teeth and wonder if you're going to make payroll.
Totally.
How easy is this job compared to being a founder?
Being a founder is so much harder. It's not even close.
It's not even close. 100 times.
It's hard to call being a
You've
VC
done
a
6
job.
investments in how many years? In 8 years?
8 years, yeah.
You do an investment every 14, 15 months.
Yeah, about once a year, yeah.
How many companies do you have to meet with in order to place that one bet?
500 to 700.
You do 500 meetings to place one bet.
Yeah.
Is that annoying?
No, it's wonderful.
What have you missed? You must have missed some stuff.
Oh, loads of stuff.
What's the one that's just burned you? Did you miss Uber? You miss Airbnb?
No,
Did your firm miss those? Redpoint miss any?
We missed Pinterest. We missed.
Oh.
We missed Twilio at the A.
Oh.
Yeah.
You got Twilio at the B though.
Later on, I can't remember. Yeah.
What happens after you miss Twilio in the A? Or what was the other one you said you missed? The big one?
Pinterest.
Pinterest in the A. What happens? Like, do you guys sit around in the partners meeting and go, hey, let's talk about missing that? Or is it just sort of like you don't talk about it because it's uncomfortable to talk about, oh my God, are we really good at our jobs?
No, we talk about it. We're like, what didn't we see?
What didn't you see in those 2 cases? What was the conclusion you came to in missing 2 major unicorns?
I think in Pinterest, we, I don't remember that one well. In Twilio, we had questions about how big the market could become.
Right, because
it was unclear how many developers were going to use telephony.
Right.
Yeah.
But you knew that Jeff was brilliant.
And an unbelievable presenter. Yeah.
The guy's brilliant.
Amazing.
So you see a product that a small number of people love, and you see a product with a great founder, but you got tripped up on the market size.
Yeah.
Yeah, that happens. All right, listen. The book is Winning with Data. The author is Tomasz Tunguz. You can follow him on the Twitter. You can get the book right now. Go to Amazon and buy it. It's not on Audible yet.
Not yet.
All right, that's fine.
Got to sell a few more copies.
Sell a few more copies, and then they'll hire a voice artist. Thank you, Emmy Award-winning producer Jackie, for finding us great guests. And let's have this guy back for the News Roundtable. We'll see you next time on This Week in Startups. Bye-bye.